real estate professional status is when you, as the taxpayer, can treat rental real estate activities as non-passive if you pass these three tests according to the IRS. The first test, you have to spend more than 50% of your time working in real estate activities versus anywhere else like your job. For example, if you work full-time more than 40 hours in a week, which equates to 2,080 hours in a year in a non-real estate field, the IRS states that you must work 2,081 hours in your real property trade or business. The second test, you must work more than 750 hours in a real property trade or business. For example, working in construction or being a property manager or even a realtor. You must pass both of these first two tests. The third and last test is the material participation test. You have to materially participate in your rental activities. There are 7 material participation tests. We find that these are the top 3 that are the easiest to meet. Test number 1. You as a taxpayer or your spouse must work more than 500 hours a year in the business. Test number 2. You must do most of the work. Or test number 3, you must work more than 100 hours in the business and no one works more hours than you. Something you should remember. If you have outside management for your rental activities, the only material participation test the IRS will even consider is test number 1, the 500-hour test. Most taxpayers will have their spouse who do not work a full-time job or work at all be able to qualify for the real estate professional status because they're able to meet all 3 tests by spending majority of their time in the real estate activities. By passing all 3 tests for this tax strategy, you are now able to take your passive losses and offset your active income. Let's say you have 3 rental properties, and after you depreciate all 3 rental properties, you have a $20,000 loss on paper when it comes to taxes. Your taxable income so far is $100,000, including your wages. Well, by qualifying as a real estate professional, you can now use this $20,000 of paper loss and offset your $100,000 and bring your taxable income down to $80,000, saving you more money on taxes. As you can see, you do not need any formal education or pass any state exams when it comes to being a real estate professional according to the IRS. So if you pass all 3 tests like we discussed above, you can now take your passive losses and offset your active income, allowing you to unlock massive tax savings in your rental real estate activities. Also, if you would like to learn more about real estate, check out our videos above and let me know what you think in the comments whether this tax strategy can work for you. From Everlife Accounting Group, my name is Karina, and thank you for tuning in to another episode of Financial Sense.